Welcome back. This is Bottom Line on Bloomberg Television and streaming on your iPad and on Bloomberg.com. Here in the United States, retail sales got a boost last month. Spending rose 1.1% in February, the most in 5 months. An improved job market and stronger household finances helped to cushion the effects of higher taxes. Lori Wachs follows retails for Cross-Ledge Investments, and she joins us from Philadelphia. Lori, welcome back to Bottom Line. Always a pleasure to have you back on.
Oh, my pleasure to join you.
Lori, what did today's numbers tell us about economic growth in the first quarter of 2013? Were you surprised, as a lot of people were, that Americans kept spending in the wake of the sequester and that payroll tax hike?
It was very encouraging to see, and it goes along. We haven't been able to use this expression in a long time, but don't count that American consumer out. I mean, they had so many headwinds that they were up against this month. You mentioned a few. We had gas price increases. We had a big snowstorm in the Northeast. We had the payroll tax expiration and the increase that they started to see coming out of their paychecks. And we saw delayed tax refunds, and yet they were able to get out there and do what they sometimes do best, which is shop. And as you pointed out, in some very specific buckets related to housing and automotive, which makes sense given the big picture narrative that we're seeing.
It was really interesting because, as you point out, even excluding gas purchases, retail sales were still up 0.6%. But aren't Americans who are feeling the pinch of the smaller payroll, smaller checks because of the payroll tax hike, they're also getting hit in the wallet because, as you mentioned, the higher gas prices, but they seem to be shrugging it off.
Right, and you do have to look through the data a little bit. So if you look at the general merchandisers, they were down a little bit for the month. Not awful, and especially given we saw at the beginning of the month that Walmart leak that came out, which said it was the worst start to a month that they had seen. They couldn't even remember back that far. And the nice thing was, we're down to just a handful of retailers that still report monthly sales, but we've heard from them and through the course of the last few weeks in earnings season that things started to improve as they got through the month of February. So it does seem to be more related to that delay in the tax refunds than the payroll tax increase and the gas prices, which have backed off a little bit but are still pretty stubbornly high.
I'm speaking with Lori Wachs. She follows retail for Cross-Ledge Investments. Lori, sales at department stores like Macy's and the discounters you just mentioned, Walmart and Target, they did help fuel a 0.5% rise at general merchandisers. But the department store category overall was down 1%. What happened?
It kind of goes along with what we were seeing. So where are consumers really out there spending in force? And the #1 category was home improvement related. And part of that, a little bit of a tailwind still coming through from Sandy. But also one of the most important things to point out is this increase in household net worth tied to most people's biggest financial asset, which is their house. And that's up about 10% across the country year over year. And people are starting to realize, I haven't felt safe going out and doing these home improvement remodels the past few years because I didn't know what my house value was. Now they're starting to see some comfort there, and they are starting to spend on those remodels. And that's really starting to help drive this retail economy. Not so much the need to go out and spend on clothing when we've had a very cold, February, but certainly as it relates to home improvement, that's where consumers are spending.
Lori, we have yet to see a significant impact on the consumer because of the sequester. Are retailers prepared for a possible slowdown in the second and third quarters, or will we see numbers as strong as today's when Americans start getting their delayed tax refunds?
Right. Interestingly, the retailers have still been pretty disciplined in terms of inventory, so they're not looking for things to go gangbusters anytime soon, which is important that they really continue to model their inventory at a very reasonable level. But on the other hand, if you look at consumer confidence that came out midway through last month, there's been a real about face, and the expectations index, which had just been slammed for the past few months as people were concerned about the fiscal cliff, that was up a staggering 23% versus where it had been. So I think the consumers may be getting a little bit tired about hearing all of this nonsense that's going on down in Washington and saying, the job environment is picking up. My housing situation looks better. I'm feeling more confident. I'm going to go out and spend a bit more.
Lori Wachs, she follows retail for Cross-Ledge Investments, joining us from Philadelphia. Lori, it's always a pleasure to have you on. Thanks for your time.
Thanks for having me.
Up next, we'll hear from Republican